Welcome to In the Money. I'm your host, Daniel Dent. Over the last 20 years, I've worked with families and businesses, helping them become financially savvy. And now I'm going to do the same for you. Each show, I'm going to share personal financial topics to help you make better informed financial decisions. If someone in your family unexpectedly passed away, what would that mean for the rest of your family? Would your wife or husband need to get a job or a second job to make ends meet? Would their new job or second job be able to cover all of their monthly expenses? Would your spouse and kids have to move to a smaller home or a less expensive neighborhood? Would your child have to change schools? We're talking about a difficult topic that most families often avoid discussing. Joining us today is Matt Bailey, CFP with Pathway Financial Services, to help us navigate this tough topic. Based on a survey by Bankrate.com, about 42% of Americans don't have life insurance. If you don't have life insurance, don't know how much you have, or are questioning if you have the correct amount or the right kind, stay tuned.
You are watching Germantown Municipal Television, your source for everything Germantown.
Discussing the impact of life insurance today. Joining us is Matt Bailey, Certified Financial Planner with Pathway Financial Services. Matt, thanks for coming on today. Appreciate you coming out.
Well, thank you for having me, Daniel.
Before we get started, tell us a little bit about yourself and what you do at Pathway.
Well, Pathway Financial is a small family-owned business. We do benefits for small businesses such as 401ks, health insurance, life insurance, retirement plans of all kinds. And on the individual side, we also do individual financial planning, which encompasses everything from helping you save for retirement, how much do I need to save, how much life insurance do I need, how much do I need to save for college, all that sort of thing.
Yeah, so that's perfect because that is what we're talking about today, the impact of life insurance. And so a lot of people at the top of the show I mentioned don't like to think about it. It's an uncomfortable conversation. So why should that be a priority for people?
You're right, Daniel. Nobody likes to think about death. But unfortunately, it's probably going to happen to all of us at some point. And it's really important to plan ahead because what you want to do is you want to make sure that your family's provided for if something happens to you. And it ranges from wanting to just put your kids through college, pay off your debts, to leaving something of a legacy for either your charity, your favorite charity, or a church.
So let's get into that a little bit more as far as who needs it. You'd mentioned if you have a family and college needs and things like that, but if you're single and don't have kids, are there reasons that you would need life insurance?
There could be. Most of the time, the biggest need, especially for term insurance, is providing for your family in case something happens to you. But if you are a single individual who wants to leave something to charity or to your church, that would be a good reason to have life insurance. And don't forget that your life changes. You may not be married today, but you might be married in the future. You might marry somebody who has 3 kids, so all of a sudden you've got 3 kids and a spouse to take care of. So what could happen to you is you become uninsurable. So it may be a good idea to get some insurance now while you're young and healthy and insurable to provide for that family of the future.
Let's talk about some more of those scenarios because honestly I haven't thought about that. That's a great point where you could get married to someone and then all of a sudden you do have a large family or a family. But if nothing else, let's say you get married and you have a spouse. So are there reasons why you would need life insurance if you don't have a child?
Yes. Let's say your spouse doesn't work, and for whatever reason they choose not to work and they're stay at home, maybe preparing for a family. So you want to make sure that your life insurance covers the needs of your spouse and any eventual family that you have. So even if you're married and no kids, there could definitely be a need for life insurance.
Yeah, really countless scenarios. There's one that's kind of off the wall, and I promise you I'm not making this up, but we had a situation a few years ago where a gentleman passed away, and he had a parrot, like one of those big parrots that talk, that sit on your shoulders and you take pictures, that kind of parrot. And the gentleman set up a trust and had his assets and some life insurance set aside for the care of the parrot because he knew that the parrot would outlive him.
Yeah.
One of the crazier things that I've seen, but again, a lot of different scenarios that come into play when you're thinking about insurance. So what if I'm older, I'm approaching retirement, or I'm at retirement? My needs are going to be different. What are some of the situations there?
They absolutely will be different, or can be different, let's say that. If you've done your planning well and you have a nice nest egg put aside for retirement, then your needs will be less. If your house is paid for, if your kids are grown and out of college and on their own, your needs will be less, because again, that insurance is there to take care of your family in case something happens to you. And what it does is it replaces the income stream. So obviously if you're 60, your future income stream is less than if you're 25. So the older you are, theoretically, the less you need in life insurance.
Mm-hmm. And if you are, one other scenario that I'd like to touch on, maybe you have older parents and they're living with you, or you're supporting them. And can you talk about that, or have you had clients in the past where you've had to work through some of those insurance needs?
Yes, absolutely have. And that, when your parents move in with you or they are dependent on you, that just increases the size of your family and probably the amount of life insurance you may need to cover all those needs. And it gets even more complicated when the family's living with you, and if something happens to you as the breadwinner, are they going to have to move out? Are they going to have to downsize? Are they going to have to go into a nursing home with state offered assistance? Or it could very well affect them.
Yeah, I'm a big proponent, and there's a lot of information out there on the internet or different videos you can watch. I'm a big proponent of sitting down with someone, and kind of based on what I'm hearing you telling me and all the different variations and different things in individuals' lives, it really reinforces my own personal opinion that it makes more sense to sit down with a professional to talk through some of these things, because there's a lot of things that even I've been in the business, I may not think of that talking to a professional may help identify.
That's right, Daniel. There are a lot of different situations. Everybody's situation is unique. And if you're young and single, you think it's pretty straightforward, but there are so many variables. How much college debt do you have? How many kids are you going to have? We need to plan for the future, even though that future is just a snapshot in time. But we need to do the best we can forecasting the future so that you're provided for and your family's provided for.
Mm-hmm. And real quickly, let's talk about how does it work. I think most people know whether it's through their employer, you pay a premium every month, every quarter, every paycheck, or every annually, however that works, and then you get a death benefit back if something were to happen to
That's
you.
right.
But any other things you'd want to add on there around how life insurance works?
You mentioned group insurance through your employer. That group insurance is offered by your employer, and usually you can buy a certain amount without underwriting. But generally speaking, if you are of a certain age, usually younger, then you can get a big term policy much cheaper than the group insurance.
I want to talk more about that, but we need to take a quick break. We'll be back in just a moment. Stay with us.
I think someone at my friend's school has this thing called autism. My friend's brother's son has autism. My neighbor's son has autism. My son has autism.
Autism is getting closer to home. Today, 1 in 68 children is diagnosed with autism. That's about a 30% increase in 2 years. Learn more at autismspeaks.org/signs.
Right, mi cariño. So like I said, everything I learned about cooking, I learned from Grandma's empanadas. Shall we go again?
Yep.
Mix the beef with the onions with the peppers with the paprika with the garlic with the oregano with the cumin. Got it?
Got it.
Throw in the olives, stir, season, stir again, pour out the flour, roll out the dough, make a circle, drop in a fistful of filling, fold over, press down, and ta-da!
Most parenting is hard to do in just 2 minutes. But 2 minutes twice a day making sure they brush is easier, and it could help save them from a lifetime of tooth pain.
You are watching Germantown Municipal Television, your source for everything Germantown.
Welcome back to In the Money. If you're just joining us, we're talking about life insurance. Today we're joined by Matt Bailey, Certified Financial Planner with Pathway Financial Services. Matt, before the break, you had mentioned group life insurance. That's through your employer. What's the difference between a group life insurance policy and then just going out and buying your own or through your local broker or insurance agent?
Good question. A group life insurance policy is obviously offered through your employer. And usually there's a standard amount that everybody gets, and you can purchase additional insurance up to a certain amount with no underwriting. And usually it increases every year the amount you can purchase. Whereas the term insurance, the individual insurance, would be something that you do on your own. You're paying the premium directly to the insurance company, and it's your policy. So whereas the group insurance policy may or may not be portable, and what I mean by that is if you leave that job, whether you choose to or they choose to let you go, you either can or can't take it with you. It depends on the policy and it depends on the employer. So that may be a piece that you think you're going to have for a long, long time, and all of a sudden it's gone. So just keep that in mind when you're factoring that into your overall life insurance need and supply. Whereas the term insurance, it's yours. It's going to be with you for as long as you pay your premium or until the term ends. So it is something that will be with you for as long as you need it, hopefully.
So let's talk about how you get insurance for a moment. What are some of the things that could disqualify you? Because some of us like to ride motorcycles and go skydiving and you know, no, we're not supposed to smoke these days, but a lot of people still smoke.
Sure.
or maybe drink. And how do those things affect getting a life insurance policy?
Good question. In and of themselves, not many things will disqualify you for life insurance. However, some of them would be, obviously, if you have a terminal illness, nobody's going to want to give you a life insurance policy. If you have a chronic disease, if you just have really generally poor health, if you abuse drugs or alcohol, you might be declined. And believe it or not, even if you've had a recent bankruptcy, they may decline you for that. So, but generally speaking, what the insurance company does is they gather information on your current health through a physical and blood samples and sometimes an EKG. They look back at your history through your medical record. When you sign that form, you authorize them to go back through your medical records and see what conditions you have had or may still have. And then they ask you lifestyle questions like your motorcycle riding. That in and of itself probably would not make you declined. However, it's probably going to increase your premium. There's skydiving, there's pilots, there's rock climbing, there's scuba diving, all sorts of things like that. And basically for each of those adventurous types of living, there's a questionnaire. There's a questionnaire for all those. And they're going to ask you things like, well, how often do you go motorcycle riding? Where do you go? How do you ride? What kind of motorcycle do you have? So it's going to make a difference in your rate. So you might be rated up and pay a little more premium, but you're probably not going to be declined. And an interesting thing is that if you were a pilot, if you're a commercial pilot, they don't have to answer that questionnaire. If you're a private pilot, you have to answer the questionnaire. And they ask you things like what sorts of planes do you fly, how often do you fly, how many hours have you logged. But apparently commercial aviation is a whole lot safer than personal aviation.
So what I'm hearing you saying is all of the fun stuff is going to cost me more money, right?
Absolutely.
Man.
If you're healthy and boring, you're probably going to get a better rate than if you're adventurous and living on the edge.
Being a grown-up is no fun.
It's expensive.
Let's talk about, there's a lot of military veterans out there right now. Some are in war zones or in other countries. does that affect their ability to get life insurance, whether they're on active duty and no telling where they'll be in the future, or if they've come back from a foreign country?
That's a great question. And let's say you're in the reserves. So right now you're not in active military, but you could be called up and sent to a war zone. So you have life insurance, you bought your own term policy, but there is usually a very specific clause in each contract that says if you are killed in a war zone, whether you're there for military purposes, humanitarian purposes, you're on a mission trip, whatever the reason, we will not cover that death. So there's a specific exclusion for that. If you are active military and you're in a war zone, usually the government provides some sort of life insurance for that covers where your personal policy would not.
I've found that to be the case also with the government providing some coverage, and
Yeah.
with commercial pilots as well. There's group
That's true.
policies out there that
That's
cover
true.
them. Let's talk about, start getting into the conversation about how much life insurance do people actually need, because it seems like there's a lot of debate around, do I need 100,000 or do I need 500,000, or is someone just trying to sell me more than I actually need to get a higher premium out of me? So how do you start looking at that with your clients?
There are a lot of rules of thumb that I've heard from actually clients coming in and saying, oh, I need 10 times my income. That may be fine. It may not be enough, maybe too much. It is so personalized and so individualized because it depends on how much debt you have, how many children you have, how big your house is, whether you want to send your kids to private school or public school, whether you have family living with you. It's very complicated. And again, when we calculate these numbers, they're just our best shot at what you may or may not need. Because what most of these calculations do is assume you're going to die tomorrow. And hopefully that's not going to happen. So if you die tomorrow, you're going to need one amount. If you die 10 years from now, you're probably going to need less, because you've already gotten that 10 years of income that insurance is meant to replace.
So it sounds like that when you have that conversation, hopefully with a professional, the more open you are and the better dialogue there is, the more that they'll be uncovered, and you'll be able to hopefully dial in that coverage amount that you need a lot better.
Absolutely, because it does depend on your lifestyle. It depends on what you want to leave for your family. So it's very, very different for everybody.
I want to keep talking about this for a moment, but we need to take another short break. We'll be right back with Matt Bailey.
Cinderella found the pet that fits her perfectly. Tiana gave her pet the royal treatment. Belle found beauty where no one else did. And you can too. Share your heart. Share your love. Bring home your forever friend. Make a shelter pet part of your world. Happily Ever After begins at theshelterpetproject.org.
You are watching Germantown Municipal Television, your source for everything Germantown.
Welcome back to In the Money. We're discussing the benefits of life insurance today. Matt, before we went to break, we were talking about how to start calculating the appropriate amount of insurance. And one of the things that you had mentioned earlier was replacement income. So how do you factor that into the overall coverage that you need? So are you replacing 1 year, 2 year, 10 years? How does that work, and how you factor in the amount?
Usually it factors in to replace your income until you retire. So if you're 60 and you retire at 67, we want to replace at least 7 years of income. And we inflate it every year, hoping you'll get a raise, and we need to replace that as well. And that's less of a factor in a 7-year period, but it's a huge factor if you're 25 and working to age 67. So we definitely inflate your income. But and again, we assume you're going to die tomorrow, so we assume the worst case scenario. And that's why sometimes these numbers come back very large, and everybody says, whoa, I don't need that much. And they may not, because they may live for 10 more years, 15, hopefully 100 years, but we don't know when that's going to happen, so we plan for the worst.
So how often, because that number changes so much, how often do I need to go back and review my type of life insurance and amount of life insurance? What's the appropriate level there?
I would say every 2 years, take a look at it. Because two things are happening. One, you're living longer, so you're replacing less income, but you're also making more money, hopefully, and so your need to replace may be different than what we calculated in the beginning. And also, you may need something different because your lifestyle has changed. You may have more children now. You may have a higher paying job. You may have a bigger house that you need to pay off. So a lot can change in that time, so you do need to reassess from time to time. And the way we build these policies is to cover the biggest things in your life that would need to be paid off or if something were to happen to you. So if you have a 15-year mortgage, all goes according to plan, your house is paid off in 15 years. So in 15 years, theoretically, you will need less insurance because your house is paid for. If you have a newborn, when they're 24, hopefully they'll be out of college, sometimes not. But if you have a newborn in 24 years, they'll be out of college and you won't have to fund that anymore if something happens to you.
Yeah, and you'd mentioned earlier the piece about life stages. I would offer that if you do have a child, or maybe your kid goes to college and instead of going to a local college, they end up going to Princeton or Harvard where the tuition is much more expensive. That's something that would, in my mind, trigger me to say, you know what, I probably need to look at my entire financial situation, including my life insurance again.
Absolutely.
Yeah.
Things change.
Yeah.
It's not static, that's for sure.
Any other life stage events that come to mind for you that we should be concerned with?
Marriage, of course, changes things, as we've mentioned. Children, every time you have another child, your theoretical replacement need increases. Retirement, it goes down, and getting the house paid off, paying off student loans or whatever debt you may have, those all affect that. So,
yeah, I want to touch back too on replacing income, because we think of it as replacing salaried income, or what I bring in on my W-2 or 1099 every year. But if you do have a homemaker, and let's say my wife is a homemaker and I'm the sole earner in the household, initially you might think, well, I don't need life insurance on her. But at the same time, who's going to take care of my son if something were to happen? So there's a replacement need for there as well, right?
You're right, Daniel. Most people think, well, if I don't have an income, I don't need life insurance. And that may or may not be the case, because as you mentioned, if I'm a stay-at-home dad, I may not be bringing home income, but I'm certainly providing a service that if I were not there would need to be provided for. Taking care of the kids, taking them to school, making their lunches, getting them up in the morning. And a lot of that depends, if something were to happen to the stay-at-home dad, how much life insurance you need to replace that service depends a lot on your circumstances. If you live where family is and that family is willing to chip in and help you, that may be a non-issue. But if you live in a place where your family's not around, you don't have friends who will help you, and you don't want to become a burden to them with them taking care of your children all the time. So those are things to think about when you're talking about life insurance for a stay-at-home parent.
One other thing that comes to mind, and you had mentioned portability earlier. So if I have let's say I have $100,000 through my company, but then I have some health event that's going to preclude me from getting or exclude me from getting life insurance later on, then I leave that company and that policy's not portable. All of a sudden, the day that I walk off that job, I have zero insurance.
That's correct.
And then I potentially can't get insurance through a private company.
That's correct.
So that poses all kinds of other issues, I suppose, then, if we're not prepared for these things.
It is difficult. And I would encourage anyone looking for insurance who's having a hard time getting it to keep shopping, because there are high-risk issuers, there are companies who feel differently about your particular situation. For example, you may be a smoker and you may have a cigar every once in a while, but some companies view that as a tobacco user and you're going to be rated for it. And that rating for using tobacco is anywhere between 25 and 50% more than a non-tobacco user. So if you have a situation where most companies are turning you down, keep looking. There may be a company out there willing to issue a policy on you. It may not be a big policy, it may be expensive, but at least you'll have something.
So that begs the question, there are tons of insurance companies out there. Where do I start? Because I see commercials, whenever you're browsing online, you see little insurance company things pop up. Where's the best place to start with that, where I can get really objective advice versus someone just trying to push a product on me or a certain company because that's what they sell?
Well, what we do is we represent several companies, multiple, probably 50 different companies. So we would shop your particular case out to those companies, and then we would first look at the rate, but we always want to look at the financial stability of the company. We want to make sure they have a great credit rating, they have a strong balance sheet, so that they're going to be around if and when I need that life insurance payoff.
So again, to me, in my mind, it's a benefit to go to a professional versus just seeking out the cheapest premium out there, right?
Absolutely, because many times we apply to a company and we feel like this is going to be the best rate, it's a great company, it's a strong financial situation, and the policy is convertible, it's everything we want. But their underwriters come back and say, you know, you're not as healthy as you think you are, so we're going to charge you a lot more on your your life insurance premium. So at that point, what we do as a company is we go back and say, what other carriers do not view those particular health situations as unfavorable? Mm-hmm. So you may be able to still get the best rate with a different carrier.
Yeah. Matt, thank you for coming out. We appreciate you spending some time with us.
Thank you, Daniel.
Today we discussed how to protect your family if you were to die prematurely. Many families avoid talking about life insurance because, as we said earlier, it's just uncomfortable. It's not fun to talk about. But they make the mistake of thinking, well, I have $100,000 or $200,000 of life insurance through my company, so everything's probably fine. If you only take one thing away from the show today, it should be to have that conversation with your family. An open and frank discussion of what your spouse and kids will need is the first step. Meet with a financial professional who will ask questions and help you think through important issues. That's all the time we have today. Thanks to Matt Bailey of Pathway Financial Services, and thank you for watching. If you'd like to see more shows, follow us on YouTube or Facebook at Germantown Municipal Television. You can also visit our website at www.gmtvonline.org. And remember, each person's financial situation is unique. Before making any decision, speak to a financial professional to see if our discussions today are in your best interest. We'll see you next month. I'm Daniel Dent, and now you are in the money.